Things are really starting to heat up in the market. We had Powell referencing potentially more rate hikes to come than were expected. The rate hike for 50 basis points is now 71% a possibility of that happening, which is way more than before. We posted earlier on Cheddarflow Twitter account that it was literally 76% chance of a 25 basis point hike only 1 week ago, and now a 50 basis point hike potential here is 71% chance. On top of that, we had a breakdown here of the October 13th trend line, which I'll go over in this video. We need a breakout of the VIX on a minor time frame chart, and then as well as the DXY, which has just been on a absolute tear lately. Look at this over here. I found a support earlier today on this now demand zone. It was previously a supply zone, but as you can see here, just absolute tear from this past day. Just a huge green candle straight through this supply zone. Very, very critical supply zone, guys, because last time we did end up going through here, it was rejected very hard. So this is a very key level. And the fact that we're above it means a lot more bullish emphasis on DXY, which, as you know, means a lot more bearish emphasis on equity. So a lot to talk about today. One thing I do want to go over is back on this SPX chart over here. You can see we did have that breakdown of this yellow line. This line goes to the October 13th low we made in 2022. Also goes to this accumulation phase we had back in the middle of December. And as you can see over here, acted as a resistance in the past, as well as a support as we went above. But we broke through this support as of yesterday when Powell was talking. And what's critical about this is we had a very hard rejection. Actually, I'll show you on the daily here. We had a very hard rejection off of my supply zone here. This is a very key supply zone. If, let's say, for anybody that is bullish, if we were to break back above this, that would warrant a lot more upside price action, potentially to go even higher than the high that we have so far. But the fact that we had a very hard rejection within the supply zone, we didn't even have a daily close within it. Literally was rejected intraday on Monday, and we had a daily close below, which, by the way, this is a shooting star candle. That is a very bearish pattern that you typically see before further downside, which in this case, we did see our further downside here on Tuesday after Powell began to talk. So very critical breakdown here because of the shooting star, also the supply zone. On top of that, we broke down below the October 13th trend line, which means that this demand zone is now going to act as a key level that will likely pin price within the next week or so. Now, there is a potential of a short-term bounce tomorrow, I must say, just based on the close that we had earlier today. This is kind of dependent on the gap that we get tomorrow. There's still potential for a gap down, let's say, which would erase any of the momentum that bulls had closing the day. And also on top of that, just a basic drawing here. If you look at this channel that we were within today, on top of here, I consider this to be a form of a pennant. If you look at this, we did end up retesting it at the end of the day. So again, if we did have a gap up, whether it be inside of the channel or back above this channel, it is likely that we will see about 4,020, 4,030, 4,040 at the complete max for a retest of that October 13th trend line, which would end up having downside afterwards. That's the bullish case for the very short term. It doesn't have to happen, but if you are a bull, at least in the short term here, there's the potential that we could see that, and that's totally dependent on the gap we get tomorrow. If we gap back into the channel or also back above it, that could warrant some potential for 4,020, 30, or 40, etc., as I just said. So that's one thing to note. Again, it doesn't have to happen. If we had some form of a gap down, then it'd be even quicker that we get to this demand zone, but both paths inevitably lead to this demand zone yet again. We bounced right off the top of it. I haven't changed these lines at all. It was the exact top that we bounced off of on March 2nd before continuing higher to the supply zone, which we ended up bouncing off of that as well, just the opposite direction for a hard rejection. And I do expect us to get back to this demand zone after this hard rejection we had from up here in the supply zone. And I'd like to see a retest of this downward trend line within this demand zone. And the reason why is this will act as a form of a pin on price. And yeah, I know there's a lot of trend lines on here. I'll clear up some of them, like the ones I just drew. But for the most part, this line is everything, especially once we retest it, which I do expect will happen within the next 1 to 2 weeks. And you can see here it starts at the all-time high that we made. Reference this in basically every video because this is a very crucial trend line. It is warranted that I do reference it in many videos. So you can see here we did reject all the way back in early April / late March. We rejected here in August, and we also rejected here in December. We did break back above it earlier this year in January, and now we're getting closer to a retest of this level. I'm very interested to see what happens just on a basis of price action once we retest this level, especially because there is this key white box, this key demand range right around this level. So there is a potential for a short-term bounce off of this around this like 3,885 to 3,900-ish level. So I am going to be watching very closely once that hits, and I do expect that will hit, like I just said, within the next 1 or 2 weeks. Again, there still could be a potential of a short-term bounce, but that will be faded, in my opinion, towards this box yet again. So just making that clear up front. Next thing I do want to go over here is the VIX. Very key breakout that we had, although the VIX, again, has had a lot of difficulty lately, just being able to stay up. Any bounce that we've seen within the last couple months has just been faded overall. So we still are above this breakout level. This is a minor breakout level. It's only on the 15-minute chart. It's not like it broke out on the daily, but still breakout nevertheless. And we are above this demand range, or we closed right within it today. So this is a key demand range that we've tested previously. And each time it's been tested has been the start of an upward trend until the mid 30s, as you can see from the past times over here. Every time this demand range was tested, just went all the way up to 30 afterwards. So we have been staying around this kind of like demand range for a while now. In previous times, it was pretty short-lived that we touched it and then kind of bounced right off of it. So this has been extended so far, and volatility has been falling quite a bit, especially over the past couple months, like I just said. But this is a first good sign of a breakout of this level that I showed you here on the 50-minute chart. On top of that, the demand range, I'd like to see a weekly close above this demand range. If you look at the weekly chart over here, we did have our first initial breakout from back here in early February, but that did get sold into, and we had a lot of downside in this end of February week. So again, I would like to see some form of an inside bar on this candle for this weekly chart, which can warrant some more upside on the VIX and can help for further downside in the S&P 500. And I do want to go back to SPY for a second. This is another chart that I have. This is a key channel that we've been trading within since we made that pivot high back here on February 2nd. We had a perfect rejection from this line right here, which stretches back to 2018. What's key about this is we had a hard rejection off of this trend line. We fell down and we broke back below the channel, the two yellow lines, the top one here and the bottom one. We retested it today throughout the day, and it was rejected each time. And we did retest it and closed right on this line for the close. Again, with the possibility of a short-term bounce, at least tomorrow into Friday, that would require some form of a gap up into the pennant that I showed you earlier, as well as this gap up would mean price would pick back up into the channel, which would mean that this downside would be a form of a fake breakout, which could warrant some more upside price action, again, only in the short term. Again, watch if we have a gap up tomorrow, and if this line holds, especially within the first hourly candle, that is bullish for the short term into the end of the week. Otherwise, if it's flat with a gap down, that is more bearish emphasis for tomorrow into the end of the week, actually into next week for CPI as well, I'd argue. So do watch that for tomorrow. Very key to understand where price action is going, at least in the short term, especially if you are a day trader or if you want to get into any form of a short-term swing, that is. So this is what I'm watching at the moment. Also, what I'm watching is Tesla flow. Tesla flow has been very, very bearish today, especially to start this entire week off between Monday and Wednesday of this week. A lot of bearish flow that we've seen some pretty incredible orders, like some leaps around the 120 strike, going pretty far out the money. And if you look at the Tesla chart, which we'll go over to here, and you can see that this has had a very hard rejection, and we just found a support at the lower end of my demand range on here. Although this chart, for the most part, not looking the best at the moment. Again, it had a very hard rejection up here. This is a form of distribution. Would not be surprised to see a slight bounce because we're at the lower end of this demand range. As you can see, we did have a little bit of a pickup yesterday. Do be careful if we have a gap down below this demand range, because then that would mean there's a lot more downside to come. But at the moment, it is finding a support at this lower end of the range, which again could lead to a short-term bounce, kind of like what SPY potentially has. But again, watching the gap tomorrow as well as Friday, they can give us a lot of insight. And in terms of the mid to long term on Tesla, this is not looking the best just because of this distribution phase we had up here, kind of similar to what we saw back here around this distribution phase, which funny enough looks fairly similar to what Apple is doing right now. Look at this supply zone and kind of chart structure where we had a double top and then a retest after that to form a triple top looks very similar to what we saw in Tesla from back here. Look at this chart, double top over here, breakdown, had a triple top form, and then it fell down quite a bit after that. Apple, very similar thing, very similar chart structure that it's going through right now. So do watch this as long as it stays below this supply zone up here and we don't have any form of a daily close, 2 daily closes that is, or even a weekly close above this level. This is in more bearish territory throughout the next couple months. So do watch this, very similar to what we saw with Tesla, like I just said. So this is a potential short setup, at least in my mind, as long as we do stay below that supply zone. That is very key. You can see here with just the wicks on the daily chart, there are a ton of fresh sellers up here, guys. Because of all these wicks, we haven't had a close within the daily chart within this supply zone. It's only wicks, which again shows that there's a lot of sell pressure up here. So no surprise that it's had a rejection already, and I would expect another rejection here within the next couple weeks to begin more of a downside leg on Apple, which again would also impact the overall market, especially because tech has been leading as of lately just throughout this short covering rally, more so between what we saw in January and February, but still tech has remained fairly strong in comparison to other indexes such as the Dow, which has really taken a beating. If you look over here, because of the DXY, the dollar has spiked up quite a bit, which has hurt the Dow equities in general, but especially the Dow and industrial stocks. So that's one thing to note. And one last thing I want you guys to look at here is the dark pool levels. And if you look back on Tuesday of this week, look at this here. We had 3.3 billion worth of premium at the 404.44 level, which at the moment seems like it's a pretty hefty seller up there. The last time that we did see over 3 billion in premium was all the way up, if you remember, on SPY, was all the way up back here in this 416-ish range. We saw some at 415 and 416, both about 3 billion in premium, and we haven't seen any 3 billion plus since until we saw those 404, so right around this range over here. So pretty large sellers up here last time, and as of now, it looks like there is a fairly large seller around this 404 level, and we've remained below since then. So another thing to note, continue to watch dark pool levels. They can give us lots of insight on potential large sell blocks, which can act as support/resistances, and also can tell us if there's going to be a substantial move to the downside. Last time, remember, we saw those 2 large prints up here. We did see a substantial move to the downside afterwards, and so far we're seeing a substantial move to the downside after that 3.3 billion print hit the tape at the 404 level in terms of signature dark pool prints. So I am monitoring both, but otherwise, best of luck with your trading for the rest of the week, and I will see you guys on Sunday for another video.